Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I am turning bearish again on the market. The setup is perfect. Um, I've been bearish to neutral probably 5 or 6 times over the last 6 months. A couple of them were very profitable, and the others I've taken small losses. Again, this is one that the market really has to start going down uh, like tomorrow to make this work. And, um, you've got a couple of things going against you. You got bullish seasonality. Uh, Even though last year we had bullish seasonality and December didn't turn out so good. And you also had another negative rainbow convergence a few months ago, and prices actually, after a big decline, prices broke through it to the upside and cost me a little bit on my suggestions on this channel. So I will cut this short if I'm wrong. And with that, let's get into it. I think the potential here is huge. And so with that, let's get into it. Okay, so this is big picture stuff. This is the S&P 500 going back to 1997. And what I want to point out here is that for 3 years, as prices hit higher highs going into the 2000 bubble, this was the most speculative market that I ever experienced. But I think we're kind of there again. And here you had higher highs and lower highs on a relative strength index, suggesting that while prices were going up, there were people that were selling underneath the surface. You fast forward to 2007 and you had a much smaller negative divergence. I think it was like 11 months only. And then you go over to where we're at now, and we're at like 4.5 years. So this is by far the largest. If you look at, this is a monthly chart. So each bar represents a month of price action. So here's your bullish channel going back to '09. You want to buy at support, you want to sell at resistance, and here we are hitting our head on resistance again. You can see the last time this happened, we had a pretty good decline. And so big picture stuff is saying, this could go down a long way, and that's why I don't want to miss it. So now we're going to go to a weekly chart where each candle or bar will represent a week of price action, and we're going to look at like 3 years. So just this part. And here we are. So here's our bullish channel on a weekly chart. This is a different bullish channel than what we saw on the monthly chart. This is tighter. It's an intermediate term chart. And so here's our support and here's our resistance. And so I'm highlighting some bullish engulfing patterns where the white bars are, these are candlesticks actually, and where we'd have an up week and then we'd be totally engulfed by a red week. You can see it didn't seem to matter this time. We bounced on a new high slightly, and then we had a new one uh, 4 weeks later, and it seemed to matter this time so far. And we're getting a little bit of a bounce this week, Friday and Monday actually. And so, same thing. We want to sell at resistance. We want to buy at support. And on the weekly chart, this is a different negative divergence. This is just on the intermediate term. It's saying that while stocks have hit higher highs, we've had lower highs on our relative strength index, flashing a caution sign, beware a change of trend is coming. Now we're going to look at a daily chart that just covers 6 months. And here we go. So here's the 6 months chart. On the daily chart, where each one of these candlesticks represents a day of price action, you can see again we had a negative divergence going into the end of October, and we haven't been able to recover there yet. Want to point out a couple of other things. This is only what, 1, 2, 3 months in the making, a small bearish head and shoulders top pattern. Here's your left shoulder, here's your head, here's your right shoulder, and here's your neckline. So when we broke that, the price projection is 6,300. And we got a good start to that with the break. And now we've had 2 days of an up market, which after losing several hundred points in a matter of days is kind of natural. But what I'm really basing this bearish call on is a confluence of moving averages that are resistance for this. And the term that Tom McClellan gave this, Tom is a well-known market technician. His father and mother created the McClellan oscillators and back in the 70s. And Tom has used this confluence of moving averages when prices break down and these moving averages come together. Two things can happen. They can sit there and wait for the moving averages to move down, which is a type 1 convergence, or they can retrace back to that convergence, which is a type 2 convergence. If prices can't break through, it promises a new lower low. So you can see today it did everything it could to break through that confluence of resistance, that confluence of moving averages. And so I really want to see, from the big picture, the 25-year chart that I showed you and why I'm bearish on a long-term standpoint to the short term. This is the setup. This could be, and I don't want to miss it. So um, if it can't break through, it promises a new lower low, which is no big deal. Maybe we get down to our head and shoulders price projection on the downside. My stop is at 6,800, so my reward to risk right now is really good. What am I going to lose? I'm going to lose 1.5%. But I really think at some point, that big negative divergence on the monthly chart is going to matter. And, we're going to get a 20, 30, 40% correction. And I just want to clarify that why I am bearish on the overall market, I continue to make recommendations on stocks and sectors and commodities that I like. So it doesn't mean I'm all in cash or I'm short the whole market and in my whole portfolio. Normally, I'll go 10% bearish on the market on something like this or anytime, um, and then try to, add things around that outside of the stock market that look good. And also some stocks that, whether it's gold miners or it's, uh, a currency, the dollar, or it's treasuries, which of course I'm short treasuries right now, which is unconventional, but I'm just following my charts. So there's a lot of moving parts right now, but one of the parts that I want to get right when this happens is I want to be able to profit um, on a big decline in the market. And so I think this is a great reward to risk scenario where I'm not risking a lot of capital with the potential to profit immensely if I'm right. So, oops. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends, neighbors, your family. Have a great evening. Nice Thanksgiving. Enjoy all the really important things in life. Adios.